Hi, today we continue with the multiple choice, paper 12, February, March 2020. Okay, look at the first question. Which task will be carried out by bookkeeper, not the accountant? So accountant basically end of the part, he will do it. Bookkeeper, basically the key thing for the bookkeeper is a recording. What kind of recording? Which is the double entry, book of prime entry, and up to the trial balance. So this is for the bookkeeper. Whereas accountant basically is more to analysis, financial report or financial statement. So here compare 1 year result with those. This is a job by the accountant. Interpreting of the accounting record is more toward analysis. Preparing financial statement, which is the financial report. Recording transaction in the ledger and the cash book, which is perform the double entry and book of prime entry. So the answer should be donkey. Next. A business provide the following information: non-current asset, current liability. The business made a profit of 10,000 for the year ended 31st. The owner did not make any drawing during the year. What was the capital on the 31st January? So beginning of the year, we find the opening capital, which is the asset minus liability. Asset, this is a 2 asset and this is a liability. They didn't mention about the non-current, so we assume no non-current liability. So take 75,000 plus 40,000 minus 25. We get the opening is 90,000. So a simple T account for the capital. Opening balance must be in the credit side. Okay. Business made profit. Profit is in the credit side, 10,000. For the year ended 31st January 2020, the owner did not make any drawing. The mean drawing is 0. So to calculate the balance carried out, the question is end of the year, means that balance carried out. So these 2 plus, you get 100,000. So the answer should be donkey. Okay, now let's move on. Okay. Dilip is a manufacturer. He purchased a machine on credit from Sachin. How did Dilip record this? Account to be debited, account to be credited. Purchase machinery. Machinery is a non-current asset to the manufacturer. On credit means that Sachin is the one giving up. So this one will be credit. Machinery will be debit. So double entry will be debit machinery, credit Sachin. Okay, now next move on. Mui owned a household appliances store. He took home a washing machine for his personal use. So home appliances, that means washing machine is a inventory. He sell the home appliances for his personal use. Personal use means drawing account must be debit. Mui record this transaction. Debit drawing, credit sales. Since that this is the inventory, we should not credit the sales. We should credit the purchases because this is not the sales item. Did we make the correct entry to this transaction? Debit is referred to the drawing. Drawing is yes, correct. but credit should be purchases. The answer is no. So answer should be C. Let's move on. Question 5. The following account appear in the book of Abdul. So Hanif, debit side, return, bank, discount. Here, balance brought down means that this is a trade payable. Okay, because purchases. And this one is a discount received. This one will be purchases return. So which statement is correct? On 1st January, Abdul owed Hanif 400. Yes, the answer. Okay, next. On 4th Jan, the Hanif purchase. This is not Hanif purchase. This should be Abdul purchase from the Hanif. Okay. On 31st Jan, Abdul allowed Hanif $8 trade discount. This one is not Abdul allowed. This one should be Hanif allowed Abdul, and this is not the trade discount. This is a cash discount. Next is that on 31st January, Hanif owed. This is not Hanif owed. This should be Abdul owed Hanif. So the answer should be A. Now let's move on. Question 6. Which business document contain detail of purchases, return, payment occurring during a trading period? So here, purchases, return, payment. This is when you buy, you receive the invoice. This purchases invoice. When you return, you get the credit notes. When you make payment, you will have a receipt or the bank-in slip, okay, or voucher, because you make payment, a voucher, payment voucher also can. So which one have contained all of it? Credit note is when the goods return. Debit note is request deduction on invoice due to the goods return. This one is from the customer to seller. Okay, invoice can be purchases invoice or sales invoice, depending from whether from customer point of view or seller point of view. This document is the one contain a summary of the month transaction. So the answer should be donkey. Okay, Rashid sell goods on credit and allow her customer a trade discount. Which statement is correct? A debit entry is made in the customer account in the sales ledger for the net value of the goods sold. So it means that under your sales ledger, customer, you will put sales net amount in here. Credit, debit side, okay? Debit, customer, credit, sales. The date of sales, name and customer, cost price, and the trade discount are entered in the sales journal. Yes, this one also correct. Okay, which is under the sales journal. You have 3 columns. Some is 4 columns because you have deduction. This is a date. This is a detail. This is a dollar sign, which is the deduction for the trade discount. And this is show the net. The trade discount is debited. Okay, take note that trade discount, no accounting entry. So basically, this one, no need debit credit. No accounting entry means that no entry, only record in the sales journal as a part of the recording. So answer should be 1 and 2. Okay, number 8. The total of a trial balance agree, but it was found that the purchase of office equipment has been debited to the office expenses. This is a expenses section. This one is a non-current asset section. So this is error principle. So come to the commission. Error of commission is the same class, wrong account. Compensating means that more than two error offset each other. Okay. Original entry means that start from the invoice recording, the first documentation, to the book of prime entry, to the ledger. This part, when you first recording, already make a mistake. That is called original entry. Okay, now let's continue. On 31st January, Somra bank statement showed a credit balance of 740. This is a bank statement. When it shows the credit means our bank account having the money. Compare with the bank statement with the cash book he found. So here we have bank statement. Okay. Add uncredited amount less unpresented check. We should get the cash book amount. So here credit balance means positive. Cash bank charge not recorded in the cash book. So means that this one should be higher. Next, check paid but not presented to the bank. Okay. Check paid not presented to the bank means that unpresented check. Unpresented check means bank statement has not deducted, cash book has deducted 150. Somra update his cash book as required. What was the update cash book balance? So this one minus, we get the 17740 minus 150, which is we get 590. But this 30, okay, is already not recorded. Bank charge not recorded. They say that what was the updated cash book? This one already deducted. So in the cash book, we straight away take this amount. Okay, and no need to minus one more time because this will reduce the cash book. So this one is already deducted. So we just take this amount as updated cash book will do. Okay, so this one, take note that because here why they say not recorded in the cash book, because we don't need to adjust. The reason is this one already deducted. So we don't need to deduct one more time. Now, next, continue. Okay, question 10. When Mark started a car repair business, he purchased premise and equipment. This is a non-current asset. 2 years later, he spent 5,000 on the building extension. Okay, built bigger building. 600 on the new equipment. This is a new equipment. And 750 on the repainting the original. Repainting original. This is the expenses. We call revenue expenditure. But these two, new and extension, this one is a capital expenditure. Okay. So by how much will the non-current asset increase because of this transaction, which is this 600 plus, where is that? Sorry, 600 and the 5,000. So 5,600. So answer should be B. Now let's move on. A farmer sold a piece of land at market value. How should the proceeds of these sales be treated? This land at market value, this is a dispose of the non-current asset. So this is a capital receipt. You receive the money. So non-current asset. So this is a disposal, which is a money received. We should call capital receipt. Okay, question 12. Why should a trader provide for the depreciation of a non-current asset? To match the cost against the revenue of the year, which benefit from the use of the asset. This is one of it. Matching concept. Number 2, to provide cash fund, enable the asset to be replaced. No, this is not about the cash funding. To recognize the most non-current asset lost value with the passage of time. So this one is correct. Okay. One of the reason is passage of time. To spread the cost of the asset over its expected working life to avoid overstate. This is also correct. One of the definition for depreciation is to spread the cost over the asset over its expected working life. So the answer should be 1, 2, 3, 4. Okay. Now let's continue. Question 13. Equipment cost 20,000 was purchased on 1st Jan. It has a useful working life 5 years. Residual value 3,000. Depreciation used straight line method was included in the year end. It was then found that reducing balance balance should has been used. What was the effect on the profit? So we count the straight line first. So the straight line is taking the 20,000, the cost, minus the residual value, and then it can be used for 5 years. So the amount should be 17,000 divided by 5, which is 3,004. Next is that reducing balance method. So which is that 20,000, because this one is a first year account. So no provision for that. No provision for depreciation or accumulated depreciation, we straight away times 30%. So 30% is 6,000. So the differences between these two. So what is the effect of this error? So we are using this amount. This is the amount we recognize. So this one lesser. So expenses understate, profit will be overstate. Overstate by how much? Take 6,000 minus 3,004. So we get 2,006. So 2,006 is profit overstated. So here the answer should be C. Okay, now let's continue. A business provides the following information about 2 expenses: electricity, accrued beginning year, end year amount paid. Okay, which amount will be charged to the income statement for the year ended? So we open a simple T account. This is the electricity. So accrued amount is a liability. Expenses accrued 240. Amount paid, which is the bank amount, 1,005. And end of the year accrued again, balance carried out in the debit side, 360. So this is the amount we charge to the income statement, 1,005 plus 300 minus 240, 1620. So 1620. So since that no other, this one should be the answer, but we just double check. Insurance. Okay. Here prepaid balance brought down 180. Amount paid is 1,002. Prepaid amount balance carried down here 220. So this is the balance we need to find. 180 minus 1200 minus 220. So which is the 1120. Sorry, 1160. So 1160. So the answer is C. Now let's move on. Question 15. Arjun rent of her premise to Aja for 6,120 per annum. At the beginning of the year, Aja has paid 2 months rent in advance. At the end of the year, Aja has paid 3 months rent in advance. How much rent was received from Aja during the year? So first of all, this is a rent received account from Arjun point of view. Okay, at beginning of the year, Aja has paid. So this one, rent received in advance, is a liability. 2 months in advance. So how to calculate? We take 6120 divided 12 times 2. So the prepaid amount is 6120 divided 12 times 2. So which is the 1020. At the end of the year, Aja has paid 3 months rent in advance, which is a balance carried down here. So we calculate 6120 divide 12 times 3, 1530. At the end of okay, how much? Okay, the year end 1 year income statement is 6120. So this one is an income statement. So this is the amount received. So we calculate 6120 plus 1530 minus 1020. So we get 6630. Okay, so this is the answer for it. Okay, now next continue. A business maintain a provision for doubtful debt of 5% of trade receivable. The balance on the provision for doubtful debt account on 31st was 2,700. On 31st December 2019, the trade receivable amount is 50,000. How will the provision for doubtful debt be recorded? So here we calculate first provision for doubtful debt, balance breakdown. So beginning of the year, this is end of the 2018, beginning year will be 1st January 2019, which is 2700. And then the trade receivable is 5%. So take this 5% times. So 50,000 times 5%. So we get 2,005. So balance carry down 2,005. So take note these two positions are fixed, won't be changed. So the income statement amount 200. So the double entry will be debit provision for doubtful debt. So debit, debit, and credit the income statement. This credit income statement we have to deduct from, sorry, this is bad because this is an income. This credit side is an income. So income have to add. So we should take the answer C. Okay, now let's continue. 17. At end of the financial year, Cindy valued her inventory at the end of the financial year, Cindy valued her inventory at cost. This value include the damage cost. The damaged goods costing 300. Cindy estimate. So this is the cost. This is the can be sold, the net realizable value. So what is the effect of the correcting this inventory valuation? So for the income statement, revenue minus cost of sales, opening inventory, purchases minus closing inventory. So this inventory supposedly to record 100, but we go and record 300. So this will make when this cost closing inventory higher, cost of sales will reduce because it's a minus. Okay, cost of sales minus, gross profit will be increased. Gross profit increase, and then our profit will be increased. So the differences is 200. So profit will be overstated by 200. Gross profit also will overstate by 200. Now here, gross profit increased by 200. Profit for the year increased by 200. Current, okay, sorry. This one, correcting. So when they say correcting, so now what happened is, when we go to adjust this amount, we go and change to 100. So cost of sales will increase, gross profit will decrease, profit will decrease. So in this case, this one should be decrease. And then current asset, which is your inventory, also will decrease by 200. So the answer should be A. Okay, now let's continue. Okay, Hassan has the following, asset. So there were no liability. Which entry would make the Hassan statement of financial position on 31st? So asset, liability, intangible. Intangible in the IG, we will only have the goodwill, which is a 3,000. Whereas non-current asset, this is a non-current asset, premises. Premises, non-current asset, 12,000. Inventory, bank, cash are the current asset. So these three added up, 500 plus 360 plus 120, we get 980. Okay, now next is that capital, because capital equal to asset minus liability. Since that there is no liability, so all this one will be equal to the capital. So since these three also tick, the answer should be C. Okay, now let's continue. AB store has the following transaction. The owner invests a further 20,000. 2,000 was paid to. So your double entry, talk about double entry first. Debit bank, credit capital. And then this one paid to trade payable, credit bank. Here a long-term loan, 5,000 was repaid. Debit bank loan, credit bank. Okay, by how much would the working capital increase after the transaction? So this one debit, one credit, So we take for the bank, 20,000 minus 2,000, and then minus the 5,000. So we get 13,000. Whereas this is a current liability. Current liability is 2,000, decrease. This bank increase. So by how much working capital? Working capital is a current asset minus current liability. So 13,000 minus 2,000. So we left with the, let me see. Okay. Long-term bank loan was repaid. Let me see where is my mistake. Okay. Here minus, working capital minus working capital. So here reduce, here plus. So 13,000 plus 2,000. So we get 15,000. So the answer should be B. Because debit is decreased, this one increase, minus. Okay, now let's continue. Question 20. The balance in the book of business include of the following. Capital employed means that capital plus non-current liability, or total asset minus current liability. So what are the information that we give to us? This is an asset, asset, liability. Asset is current liability. Cash at bank debit, this is an asset. Long term is a non-current liability. So we can just take until here to find the capital employed using this information. So current liability had to minus, all the asset had to plus. So 10,000 plus 25,000 plus 9,500 minus 6,000 plus 15,000 plus 500. So we get 54,000. So the answer should be B. Now let's continue. What is a disadvantage of operating a business as a partnership? Partnership may not agree on how to run. This is a disadvantage on of it, disagreement. Partner may not have the same skill. This is a good thing. Different skill can enhance the business. The financial statement must be published. No need. This is not the public company. The risk of responsibility are shared. So basically, it's a good thing when you share the risk and the responsibility, your burden will be reduced. So the answer should be A. What does not affect the total equity? So equity section in the limited company, we have the share capital, we have the retained earning, we have the general reserve. This is a 3 item. So here does not affect the total. Issue of ordinary share will affect. Ordinary share dividend pay will affect the retained earning. Profit will affect the retained earning. Transfer from the retained earning to the general reserve, which means that this retained earning transfer to here. So this one will not affect the total. Okay, question 23. What is a call-up share capital? Call-up share capital is the share that you ask your member or shareholder to make the payment. So that is called call-up share capital. The amount received, this is a pay-up capital. The amount request, yes, this is the amount request. The value of share that could issue, this is the authorized share capital. Okay, authorized share capital. The value of share actually issued, this is the share issue. So these are differences among the share term. So next, move on. 24. A limited company provide the following information: issue capital, profit for the year, transfer to general reserve on interim, the ordinary share dividend paid during. On 31st December 2019, it was decided to use the remaining profit to pay a final ordinary share dividend. So what percentage final dividend will be the ordinary share received? So this is profit transfer interim. So they will decide to use the remaining. So we take this profit for the year, transfer minus, and then interim dividend also minus. So we have a balance 13,000 minus 9,000. So we left with the 4,000 remaining profit. So we take 4,000 because this is a 1 unit share. So $1 share. So we just take and 100%. So divide by 50,000 times 100%. So which is the 8%. So the answer should be A. Okay, now let's move on. A cricket club set up a snack bar on 1st January 2019. The following information is available. For the year ended 31st December, receipt from the sales of the snack, cost of sales, wages, and this is a cost snack unsold. This is a closing inventory. Okay, what was the profit made by the snack bar? So we use the income statement. The revenue is a receipt, which is 3250. Less cost of sales. The cost of sales is that it just set out in the first year. So opening inventory is 0. Purchases, cost of purchases of the step bar is 2005. Closing inventory, which is this one, 520, which is need to minus. So 2500 minus 520, we get 1980. So minus 3250, so we get 1270. So this is the gross profit. And then they have one wages. So minus the wages, 250. So minus 250. So we get 1020. So the answer should be C. Okay, now let's continue. 26. A social club has the following asset and liability. Non-current asset, cafe expenses owing, subscription owing by member, balance as bank, owing to the credit supplier, cafe inventory. What was the accumulated fund? So accumulated fund means that asset minus liability. So asset, cafe expenses owing is a liability. Subscription owing by the member as asset, balance is at the bank, debit asset, owing to credit supplier. This is a trade payable. This is also liability. Cafe inventory is an asset. So we calculate asset minus liability. 6550 minus 25 plus 50 plus 500 minus 300 plus 500. So we get 7275. So the answer should be D. Okay, now let's continue. The next one. Question 27. A manufacturing business provides the following information for the year ended 30th November 2019. What was the total direct cost? Direct cost is the cost include the raw material. Second is factory wages, factory direct worker wages. Next is direct expenses. So this is a direct cost. So which one is direct cost? This is a factory overhead. Factory overhead. Machinery also factory overhead. Machine operator, this is one of it, which is the wages. Raw material consumed is one of it. So it's only two items. So 29,000 plus 82,000. So we get 11,000. 100,000. 11. Okay. So this is should be the answer A. Now, next continue. The question 28. What would be the include in the statement? What would be the include in the statement of financial position of a manufacturing business, but not a wholesale? Manufacturing business involve the process of the product from the raw material to the finished good. Wholesale is just buy and sell in a bulk. So what is the item that not in? So this is no need to involve the process of the production. So work in progress only appear in the manufacturing account. So this should be the answer. Okay, 29. The average inventory of a business was 40,000. The rate of inventory turnover was 5 times per year. And markup as 20%. What was the revenue? Okay, we prepare the simple income statement. Revenue, cost of sales. Okay, average inventory of is 40,000. And the rate of inventory turnover is that cost of sales divided by the average inventory equal to 5 times. So cost of sales will be the 5 times the average inventory, 40,000, which is 200,000. So 200,000 is in here. And the gross profit markup is that the formula for markup is the gross profit over the cost of sales times the 100%. Means that this will be the equal to 100%. This is a 20%. The question asks for the revenue, which is this one. So this one will be the 120%. These two plus get this one. So to find it using the mathematical concept, 200,000 divided by 100 times 120. So we get 200,000 divide 100 times 120. So we get 24,000. So 29 is C. So now let's continue. Summit does not maintain a full set of accounting record. What does Summit not need to calculate in his credit sales? So no maintain full set. No need to calculate his credit sales. What is the credit sales item we can use? We can use trade receivable. Here, balance breakdown, credit sales. Here will be the sales return, bank, discount allowed, irrecoverable debt. So balance carry down. So which one is the item? So dishonor check will be in here. Bank, dishonor check. Okay, so A will be sitting in here. Discount allowed will be sitting in here. Discount received, this is under trade payable. Return from the goods, this is a return from the goods, sales return. So the answer should be C. Next is that Jet has current liability of trade payable and has current asset of inventory, trade receivable and cash at bank. Which measure will improve his current ratio? Current ratio is a current asset to current liability. Okay, buying additional inventory, paying by cash. So the double entry, we talk about debit inventory. Don't talk about the purchases. Debit inventory, credit the cash. This will not, it will not change, not improve, no change. Decrease in the drawing. So when you decrease in the drawing, basically your bank have more money. Revaluation, nothing to do with the current ratio because this is a non-current asset. So this will go to debit, non-current asset, credit revaluation or the capital account. Selling inventory on the credit rather than the cash. So this one will be debit, trade payable, trade receivable, customer is a trade receivable, and credit inventory, which is the sales. Okay, this one is opposite to each other. So this one inventory debit credit, this one also no impact on it. This one nothing to do. So decrease the drawing will help. Okay, now 32. Question 32. Flo and Mo are trader selling similar at the similar price. They provide the following. So which trader have made better control of sales and the expenses? How are we going to compare with this one? Expenses over the sales times 100%. Gross profit and the profit for the year, the differences is the expenses. So this differences is 40%. This one is 32%. So this one is higher than this one. Who has the better control of the sales and the expenses? Has the expenses better control, which is a lesser, which is more. More have a lesser. When I come to the cost of sales. Cost of sales is that revenue, because they say that selling similar at similar price. That means revenue are the same. Revenue same for the Flo and Mo. So cost of sales, gross profit. Here is 50, here is 40. So here who has better control? This one is higher. That means Flo have a better control because gross profit margin has a better compared to the Mo. So 32 should be B. Okay, now let's continue. which is an application of materiality. Materiality talking about the value of the item to be recognized. So here always use a straight line when depreciating. No, this is not. Buying raw material on credit rather than paying immediately. This is no. Charging the cost of light bulb and battery to the, this is more to it because this light bulb and the battery is not significant amount. So we can charge to the expenses. Recognize goods sold only when legal title pass. This is a realization. This is materiality. Always using the straight line method. This is a consistency. Buying raw material on credit rather than paying immediately. This is a matching concept. Okay. So the answer should be C. Now let's continue. 34. Which accounting principle state that revenue should not be recognized before it is earned? So this is talking about that realization. So consistency talking about the method and the rate. Matching talking about the cost incurred matched to the revenue earned. Money measurement talking about the recognition in the account must have the value, monetary term. Which accounting objective require the financial free from the bias and error? Comparability is talking about the two financial similarity and the differences. Relevant is talking about the information able to affect the decision. Reliability is talking about the trust of the account can be trust, which is free from the error and the bias. So the answer should be this. Understandability is talking about that the understand of the financial statement. How we want to ensure it, we follow the IAS standard. So the user have the responsibility to understand the IAS. So we follow IAS standard, understandability is fulfilled. So that is what the set that I prepare for today.